Okay, we'll go through a few more of these together. These are in your slide deck, so you can be sure to go through them again and again and make sure you understand. The second transaction is the purchase of land for cash. So what two accounts are being affected? Question number one, land and cash. Are they going up or down? Well, I'm acquiring land, so I'm going to record land on my books. The land account will go up. I'm paying for the land with cash, so my cash account will go down. Both of those accounts are assets. So to record an increase in an asset, I will debit it. That is the land. And to record a decrease in the asset, I will credit it. So what's the journal entry? I debit land, top line to the left. I put the debit amount under debit column on the left, and my credit is just below it. Oops. Slightly indented with the credit amount in the credit column. Debits equal credits. I'm in balance. I then, remember that cycle? My next step is to post to the ledger. So I go to the cash page here, and I go to the land page right here, and I post the amounts. The land had a debit, so that's on the left side, and cash had a credit, 20,000. Don't forget, from transaction one, there's already this $30,000 debit for cash. So this is an accumulation of all the transactions. Go to number 3. Smart Touch Learning buys $500 of office supplies on account. Again, there's that phrase, on account. In this particular situation, since we are buying, it means we are buying supplies and we will pay them later. We owe the money. So what two accounts are being affected? Well, office supplies, I'm gaining office supplies. Their office supplies fall under assets. Assets increase with the debit. So right here, office supplies are debited, $500. The other is my debt or obligation. Remember, we call those accounts payable. So I owe the supply company money. That's a credit. Accounts payable is credited $500. My debits equal my credits. I've completed my journal. The next step is to post both of these amounts to the ledger pages for these accounts. Office supply has a debit, $500, and accounts payable has a credit, $500. Transaction 4 is we've earned revenues. The company performed $5,500 of services for a company, and they paid us cash. So what two accounts are being affected? Well, cash, I received cash, so cash will go up. And I earned my revenue because I performed the service, so revenue will also increase. How do we increase cash? Cash is an asset. The debits increase assets, so cash is debited for $5,500. Revenue is an equity account. If you go back to that slide, I told you to earmark, I think it was 16. Revenues increase with a credit. So I am capturing my revenue here with a credit. That's showing the money we make from doing business. My debits equal my credits. I'm in balance. My journal entry is correct. I then go and I post to the ledger page. Here's the cash ledger page. I'm adding a $5,500 debit on November 8th on the left side. And for revenues, I add my $5,500 credit on November 8th on the right side. Okay, similar entry because we performed $3,000 worth of services, so we earned revenue, but they did not pay us yet. See here on account, we earned revenue on account, meaning the customer owes us this time. So what is that account when someone owes us the business money? It's accounts receivable. So on account, if the money is owed to us, we use the accounts receivable or notes receivable. And if we owe the money on account, it's accounts payable or notes payable. All right, so here we go. We debit accounts receivable. It's an asset for $3,000. That makes that account go up. The balance goes up. And revenue, again, is an equity account, and it goes up with a credit of $3,000. We've then posted to the ledger here as well. Transaction 6. So this is a good entry to look at because it's more than 2 lines. You can have as many lines in an entry as you want as long as all the debits equal the sum of all the credits. Okay, so now we paid expenses. So we paid rent expense, we paid salary expense. If you go back to slide 16, you will see that an expense is increased in its account with a debit. So we're debiting expenses, right? $2,000, $1,200, each of these accounts individually. And we credit cash because we're paying both of those with cash for $3,200. Cash is an asset. If cash goes down, we credit it, right? This is called a compound entry. Keep in mind, right? Remember what I told you back in chapter 1 videos, that the net of revenues and expense, if your revenues are greater than your expenses, you have net income. And if your expenses are greater than your revenue, you have net loss. So when we were recording revenue the last few slides, we did that with a credit to revenue right here. So revenue is a credit balance, expenses are a debit balance. So overall, at the end of the day, you're going to want a credit balance overall when you compare revenues and expenses, because credit balance will increase your stockholders' equity. This here with more than 2 accounts in the entry is called the compound journal entry. So that's just a vocabulary word that's good to know. Okay, so let's do this one. This is, we owed money when we bought the office supplies, so we're going to pay $300 of the money we owe. Remember, it was $500. Remember, see here, we have a $500 balance in accounts payable. That's a liability, a debt or obligation. But we are now lowering that liability. We no longer will owe $500 because we're going to pay $300 of that debt off. So what's being affected? Well, accounts payable is being affected and cash is being affected. Accounts payable is liability. That balance in that liability account will go down when I debit it. It's going to go down by the amount I'm paying the office supply company, $300. Cash will also go down because that's what I'm paying my debt off with, $300 credit. Transaction 8 is when the customer that owed us money, $2,000, they're paying us. So here we go. We debit cash. It's an asset. Cash goes up with a debit, $2,000. Accounts receivable is also an asset. And it's going down, accounts receivable, because this money is no longer owed to us. We have collected it. So cash goes up while the amount of money a customer owes us goes down. And we added to the ledger page, cash, the $2,000 in a debit, and accounts receivable, $2,000. So if on November 22nd or 23rd, I were to go to someone in the accounting department and say, okay, how much do our customers owe us in accounts receivable? You would come here and say, well, they did owe us $3,000, they paid $2,000, so our balance in accounts receivable is a $1,000 debit balance. And that's what you would tell me.